Thank you, Chairman Risch and Ranking Member Shaheen, for holding the hearing. North Dakota is a small business state. Small firms account for 96% of businesses, and they employ over 200,000 workers spanning a variety of industries, including farming, manufacturing, and healthcare services. When we talk about tax reform, I believe we should start and end the conversation on how it's going to affect small businesses in America. That makes sure we're simplifying compliance and including the right mix of tax incentives for entrepreneurs to take risk and innovate and grow. I think most importantly, we should be doing tax reform in a bipartisan way so that we have a lasting structural change to the code that can provide small firms with the certainty they need to grow their business. I don't think there's any doubt about it. I think just kind of for the record, I used to be on the other side of this. I was actually North Dakota State Tax Commissioner for 6 years, and before that was a tax attorney. And I just want to point out one thing, Mr. Reardon. Interestingly enough, about the President's budget, where he professed to eliminate the estate tax, he kept the revenue from it. I don't know how that works, yeah. But it certainly would make you scratch your head, wouldn't it?
Yeah, yes, it does. Many things.
The other thing I want to just point out, yeah. The other thing I do want to point out is the basis adjustment that would go with elimination of the estate tax, and the need to actually have an honest conversation with small businesses. A farmer in my state may actually find the basis adjustment to be more onerous by having to take it at a basis at which their grandfather held that property, might be more onerous to them looking forward than actually an estate tax liability. And so we need to be really careful about how we approach the estate tax. But that's neither here nor there. I'm interested in the definition of what is a small business for tax reform purposes. Can anyone want to take that challenge?
So there's no obvious definition that is in the tax code where you can look and say, here's a small business. But if you just look at the distribution of businesses across the spectrum, you'd probably land somewhere around $10 million gross receipts, maybe a little more, but not a lot more than that. And that really would be sort of the smaller, not quite mom and pop, but bigger than mom and pop business, but not a giant business by any stretch of the imagination.
Annette?
Yeah, there's varying definitions, whether based on number of shareholders, number of dollar amount of assets. One thing I also want to point out, as far as what the dollar amount is, it's hard to, I'd say actually probably more than 10 million. But something also to bear in mind, some places in the law where we actually years ago defined a small business, those dollar amounts aren't adjusted for inflation. For example, under Code Section 448, that $5 million threshold for when a C Corp has to move on to accrual method, that's about $11 million today if it was inflation adjusted. So I think we also have to factor in any dollar amount we come up with, it should be inflation adjusted so it can remain relevant for continue to help small business.
Mr. Reardon?
Yeah, I think any effort to sort of draw a bright line is going to be necessarily artificial. And so, for instance, Mark's $10 million threshold, what's the difference between a company that makes $9 million and a company that makes $11 million? Do they behave differently? Are they managed or governed differently? Not really. Plus, if you do a revenue threshold...
Well, Koch Petroleum, maybe under your definition, would be a family-held business. Mm-hmm. Are they a small business?
No, they're not a small business, but they are family-held. And that gets to my point, which is I think the one bright line that is out there is the distinction between public companies and private companies, because public companies do in fact behave differently than private companies do. They have different regulatory obligations. They have access to markets that private companies do. So in my mind, I think there's a reason why, for instance, NFIB, the big small business group in town, is called the National Federation of Independent Business, not the National Federation of Small Business. It's because private companies are distinct from public companies, and I would draw the line there.
Yeah, I just think that we need to be really careful. I think we all can recognize that at a certain level, incentivizing behavior, incentivizing investment is a goal of all of ours, helping small businesses grow, helping especially family-owned small businesses grow. But at some point, we cross the line, whether it's Cargill, whether, Hess. I mean, I can give you any number, especially in the oil and gas industry, which I'm well familiar with, where you would not consider them small businesses, but they are independent businesses. I want to just associate myself with Senator Shaheen's comments about compliance costs. I think it's something that maybe Jean and I sometimes feel lonely in our caucus talking about this, because I think if you've never done this the way I have, you have no understanding or appreciation for the complexities. And I would maintain today that without tax preparation software, it would be really hard for a small business or for even a sole proprietor filing a Schedule C to actually file their own tax returns. How do we solve that problem without, just for a minute, when you look at the social engineering and the cost of providing tax benefits, which incentivize behaviors, which is another way of expenditure of federal money, right? Mm-hmm. We'd all agree tax expenditures are included in the challenges that we have, and there's been a recent report saying tax expenditures are now exceeding regular expenditures on domestic policy. And so, we understand that there's a whole lot of public policy that's embedded. How do we unravel that history to get to a rate and a formula that is simple and that is fair? Yeah, Mark.
I think the example of the 1986 Tax Reform Act was one that's instructive there, that at that time, in a bipartisan way, Congress and the administration made a huge effort to get as many of the special provisions out of the tax code as they could in an effort to lower rates. But you need to do something like that. It's almost a Herculean effort, but it takes a lot of people working together to make those trade-offs.
And have you seen any proposal out there that you say there is something everybody can get behind?
As far as a tax reform, I think probably bits and pieces, but again, it's probably a work in process. One comment I make is also we shouldn't forget how technology might help on some of the compliance. You'd mentioned before about the multi-state compliance. Technology would help. Sometimes perhaps the tax agency needs that upgrade in the technology as well to help the practitioner be able to use the technology that's out there that could streamline a lot of the compliance and the cost.
So your comment about technology is right on point. I think without sort of TurboTax and the other software out there, we would have a taxpayer revolt. I know I couldn't do my taxes without it. I don't have any specific comments other than sort of one of the reasons why we've been pushing for sort of rate parity in terms of the top rate. And not just for businesses, but for individuals. And also, if you eliminate the double tax on corporations, you could have dividends and cap gains all at the same rate. If every type of income paid the same top rate, you could eliminate dozens and dozens and dozens of sections of the tax code, and you would make the tax compliance, the tax form, so much shorter for people with that type of income, because it wouldn't matter anymore. If right now, one of the things we struggle with is this idea that people who own S corps and work there can have their income look like profits as opposed to wages, and they save they save their HI taxes, right? And it's a huge problem, and it's something we struggled with. Well, if you didn't have that differential, you wouldn't have that issue, and you wouldn't have to do the enforcement and all the other stuff. You wouldn't have to have all the C Corp, personal holding company rules. You could eliminate all that stuff, but it would just be by, let's decide what the rate is. I don't care, 28, 30, whatever the rate is, and let's apply that to all income, and we could eliminate, I guarantee you could eliminate half of the tax code.
Mr. Chairman, just with your indulgence, I once asked a farmer if he would agree to a 2% rate per gross receipts, not profitability, but just gross receipts, 2%. He said, sound like a good idea. I said, tell that to Walmart.
Yeah.
Right?
Yeah.
Because obviously Walmart operates on a very small margin. And so the complexity of American business makes this so much harder.
Yes.
And I think it's going to take good thinking people at this table and hopefully at podiums like this to come up with that dialogue and to do the back and forth. And the frustration that I have is that I see a lot of pie in the sky and not a lot of hard work. So Thank you, Mr. Chairman, for indulging me the extra minutes.